What up, everybody? Spencer Israel here with another edition of the ETF Show. I got bumped on last Thursday, for our Bitcoin versus gold debate. I'm getting bumped again next Thursday, or this coming Thursday, I should say, for our Clean Tech Small Cap Conference. So I got to do the show when I can. This is my slot, and this will be the only ETF show of the week, but we got a lot to talk about, guys. A lot to talk about and not a lot of time to do it in. Full disclosure, I did have a guest booked for today, Elliot Johnson, who is the Chief Investment Officer of Evolve ETFs. They're a Canadian firm. They have launched a Bitcoin and Ethereum ETF. They just launched the Ethereum ETF like this week. And Elliot had to cancel on me, so I rescheduled Elliot for a couple weeks from now. So I was looking forward to talking about that. But nonetheless, we have other things to discuss. So first thing we're going to do, as we start with every show, why do we care about ETFs? Why do we have a show about ETFs? Well, because if you watched First Trade last week, you would know this. They are diversified. They are tax efficient. They have low fees, they're actively traded, and they are transparent. All of those characteristics usually apply to ETFs. Not every ETF is diversified or has a low fee or is active or transparent, but most of them are. And that's why I love ETFs. So what I'm going to do is just kind of walk you through some headlines from the week in ETF land. We'll walk through last week's biggest gainers and losers, and we will take your questions, and I'll talk about what I bought. I bought some stuff on Monday. I bought a couple ETFs, and I want to talk about those and why I did that. So if that all sounds good to you, go ahead and smash that like button. And let's start with the biggest gainers of last week. Let's just start with returns, and then we'll go into flows afterwards. So if you've been watching this show, you know about this guy, BDRY, the Breakwave Dry Bulk Shipping ETF that owns shipping futures, was the biggest gainer among non-leveraged ETFs last week, up 10%. Again, this thing is just a monster. Look at this 1 year chart. You can see it's just gaps all over the place. Does not look healthy, but it's a mover. It is a high flyer. I don't know why. I don't pretend to know why. But this was your biggest gainer among non-leveraged ETFs last week. Second biggest gainer, this is not a ticker I'm used to seeing, is COPX, the Global X Copper Miners ETF. ETF that gives you exposure to copper and to miners, and it closed up 9.5%, or is up 9.5% in the last week. Today, obviously, notwithstanding, it's down 3%, but was your second best performer of the week last week. COPX. Also on the metals front, number 3 was lithium. This is one that I've thought about owning for quite some time, and I never quite pulled the trigger on it. But if you subscribe to the idea that lithium is the thing behind the thing for batteries that EVs need, then I could see why this would be of interest. But LRT up 8% over the last week, down, of course, with the market today. This was interesting. GERM was your 4th best non-leveraged ETF last week. I have not thought about this one for a hot second. It only opened last year, right? You can see the chart only goes back to July. This was sort of trying to capitalize on the pandemic, hence the ticker. And all it does is give you exposure to exactly what it sounds like, right? Healthcare testing and healthcare supply companies closed up 7.5%, or at least is up 7.5% in the last week. Very interesting, because this one's launched sort of in the throes of the pandemic last July, and I'm curious. Let's see how many assets it has. I'm curious. It has where is my AUM number. $58 million in assets. So it's got very, so this hasn't really caught on. $58 million is not a lot. For a thematic ETF like this, right? That's trying to capitalize on a moment. 58 mil. I guess maybe it is, but like I've sort of lost all context when you talk about when I've seen like these numbers out of these like Bitcoin ETFs in Canada. But $58 million, I guess really it's not bad for less than a year, but definitely hasn't really gone viral yet as far as an ETF or an asset. Germ is an ETF. Calm now. I don't know what you're looking at, but GERM is certainly an ETF. And then last but not least, number 5 last week was UNG, natural gas. And then your worst performers of the week. God, every time I do this, I have to scroll down to. So your worst performance of the week is actually one that I bought. Right? I bought a few shares. I'm nibbling in BLOK. Obviously, my timing is not good on this. But that being said, this is like a long-term swing trade for me that could become an investment. This is not a short-term trade. I have no intention of selling this at any point in the next few months, right? I like to give, like when I buy something, I give it time to breathe. Okay, so I'm going to give this time to breathe. So I'm down like 3% like off the bat in BLK, but that's okay. That's okay. I don't look at my portfolio every day, at least this portfolio, and I'm not sweating it. But this was your worst performer over the last week, which is interesting, and happens to be one that I bought. Not for any time. I wasn't trying to time it. I just I wanted exposure to some crypto, and or some crypto companies, I should say. And this is kind of the only way for now, in the U.S. at least, to get broad-based exposure to blockchain and crypto. One of the only ways, not the only way. One of the only ways. And this one does have a lot of assets. BLOK has, since it's been open, it's got, let's see, it's got 1.3 billion in assets. So it's certainly caught on. Anyway, going down to the biggest losers list for last week, BLOK SPXZ is a big loser. That's Morgan Creek's active SPAC fund. So that one's getting just destroyed. You got PBW, Clean Energy, getting crushed last week. You got PTF, a Momentum ETF that just owns Momo stocks, and Momo is out of favor. Then you've got the SPAK, one of the other 3 SPAC ETFs. So those are your biggest losers of the last week. And sorry, I'm just checking in chat here real fast. See what I missed. More of a general question. I love general questions, Ramon. I love general questions. I will get to your question. SNR is let's see, is QQQM and QQQ the best NASDAQ trackers? We can get to that one. All right, Case Mont wants to know about QYLD. Yeah, get to all those in a second. So those are your best and worst performers of last week as far as performance. As far as flows, where did the most money go into and out of last week? This is interesting. In the last week, there must have been some institution buying Morningstar funds, because if I look at I'm on etfdb.com here, and I look at the screener, the top 1, 2, 3, 4, 5 of the top 6 ETFs with the most inflows last week were Morningstar ETFs. There's a mid cap, a growth, a small cap growth, and a broad-based U.S. large cap on Morningstar. So some institution was buying a lot of Morningstar funds last week, which I found interesting. As far as biggest outflows, nothing really jumped out to me. IEUR, which is the iShares Europe ETF, had $500 million in outflows. Thought that was notable, but other than that, nothing really jumped out to me on the outflows front. Let's talk about some news, and we can't go anywhere before we talk about these Ethereum ETFs. Okay, so this is sort of one of the downsides of being in the U.S. and not being in Canada. Canada is quicker to the draw than the U.S. is when it comes to new types of assets and securities. And there are now 3 Ethereum ETFs trading in Canada right now. They all launched today. ETHH, ETHX, ETHR. The last one, ETHR, is from Evolve that I was going to have on the show today, but I had to reschedule, unfortunately. So if you have an account in Canada, if you live in Canada, if you have a Canadian brokerage account, then great for you. If this is your thing, you can now buy an Ethereum ETF. The rest of us in the US cannot yet. We're still waiting for a Bitcoin ETF, which is going to happen eventually. I don't know when. Soon. But yeah, there are your 3 Ethereum ETFs all launched today. So that is super notable for our Canadian listeners. And let us know how you do on that, because we can't trade those. I guess I could like make an account, right? At a Canadian, at like Bank of Montreal, but I'm not gonna go through with that. Okay, wanted to talk about BUZZ as well. This is the Buzz ETF, the VanEck Social Sentiment ETF. Remember, we had Jamie Wise from Buzz Indexes on the show about a month ago now, and this index, the Buzz Index that the ETF is based on, rebalances every month. And I wanted to go through that rebalancing happened last week. And I want to go and talk about what's in and what's out, because I think it's super interesting. So what's in Buzz as of the 15th? GameStop, Palantir, Viacom, Rocket. Those are the 4. There were more in there, but those are the 4 that jumped out to me as like, whoa, right? Remember, this index is adding stocks with positive social sentiment and removing stocks with a negative social sentiment, mostly on Twitter, right? So GameStop, Palantir, Viacom, Rocket are all in. Nikola's out. Etsy's out. Dropbox is out. Twilio is out. There are more. You know what I can do? Why don't I just share my screen so y'all can see? Let me just do this. Let me just share my screen. You can see the full table that I have up. This is the full table. You can see what's in. Left is in. Right is out. GameStop, Palantir, Viacom, Rocket, Lockheed Martin, U.S. Steel, Intel, Chewy, Unity, Nike, CrowdStrike, Discovery, Snowflake, Visa, Citi, Macy's, Applied Materials, FedEx, Altria, Starbucks, and Restoration Hardware are all in. On the left, Coke, Qualcomm, Twilio, Wells Fargo, Verizon, among the Trade Desk, Nikola, Cloudflare, Enphase, among the stocks that are out. So I remember talking to Jamie, noting that the GameStop was not in Buzz at launch. Well, it's in Buzz now. It's in Buzz now. So wanted to talk about that. Also wanted to talk about CNBS here today. Okay. Let's go back to my Pro and look at CNBS, because they had some news. It is 420 after all. Happy Doge Day. Happy 420 Day. CNBS announced today that they're basically going to be doing this the same thing that MSOS does. If you watched our show a few months ago, you saw a presentation about MSOS at our Cannabis conference. This is the Cannabis ETF I would own if I didn't already own the top 4 holdings, or top 5 holdings, I think. But MSOS is just an ETF that gives you exposure to U.S. cannabis stocks, and it does so by buying swap. It can't own the stock itself. It owns swap contracts on the stocks. And CNBS announced today, hey, we're doing the same thing. This is Tim Seymour's ETF, or the ETF based on Tim Seymour's actively managed index. And they said, hey, we're going to do that too. Starting now, we're going to be able to buy U.S. cannabis stocks. These are the ones that are strong, right? The ones that Curaleaf. Let me zoom out. You can see the ones that have held up, like Curaleaf and like Cresco, right? And True Leave. These are all the ones that I own. And Green Thumb, the U.S. companies that can't trade on exchanges yet, but will as soon as it's legal at the federal level. And CNBS is now going to be able to own those. I thought that was interesting. If you're into cannabis and you want to play broadly, diversify yourself, not put all your eggs in one basket, CNBS is going to be a good way now. One of the only ways to get exposure to a broad basket of U.S. cannabis stocks besides MSOS. Okay. What else did I want to hit on? Honestly, I think that was kind of it as far as me, and then I wanted to do some chat stuff. So, all right, let's go to the chat. Let's see what's on your radar here. Let's go back up. Okay, Ramon, what percent of a portfolio in ETFs would you recommend to a 22-year-old with 6 months experience in the market? That is a very, very broad question, Ramon. So let's start with this. If I could go over and do it again, from day one, and this is just my personal opinion, this isn't investment advice. I really do believe that the best way to gain entry into investing is to just pick a stock that you know and buy it. Doesn't matter. It doesn't matter. To take a small amount of money that you're okay losing and put it on a stock whose product or service you know and are familiar with. And that's how I would get my foot in the door. And then once you get your foot in the door and you understand, okay, like you understand more about stocks, why they move, why they go up, why they go down, you start learning about the overall market, the S&P 500, all these indexes, what are the biggest stocks, what move the market the most, what events are important. Once you start learning about all these things and you start building yourself up, I would start to think about, okay, how do I want to construct my portfolio, right? Like, let's say, think of it like you're building a house, right? You probably don't want to build your house by starting at the attic, right? So starting at the theater room or the game room, whatever. Start with the foundation, right? The foundation of your house, the foundation of your portfolio, right? What are your largest holdings? What is your core going to be? Okay. My core is ETFs. My core is VOO and VEU. Those are the two largest holdings in my portfolio, my taxable account. One is an S&P 500 fund. One is an international stock fund, both from Vanguard. And together, those represent about 65% of my, 65? Actually, I think VEU is underperforming, so I think it's might be 55 actually. Yeah, somewhere, regardless, more than half of my portfolio is just those two. Every other position that I have does not account for more than, I think 4%. The exception is Disney. But other than Disney, every other position that I have does not account for more than 4% of my portfolio. So if I'm I said I bought BLOK. BLOK is 2% of my portfolio. Okay. I own ESPO, 2 to 3%. Right, all of them. ARKW, 3.5%. When I buy something, I'll do the math, right? And I'll figure, okay, how big is my portfolio? And I'm just going to buy whatever 3% of that is and place my bets that way, 3% at a time. So if ARKW blows up, that sucks for me, but it's not going to kill me, right? It's a small piece of my pie. I've got other stuff going on, right? My portfolio, ARKW, will not tank my portfolio by itself. I've got too much other stuff in there to do that. So that's what I would do. I would think about, okay, what's going to be my core and what's going to be my satellites that I rotate around my core, like a planet and satellites. And I'm constantly, maybe not constantly, but I'm buying and selling ETFs and I'm rotating. I'm getting in and out of things, but I'm that core, that VOO, that VEU, that's never. If anything, I'm buying more. I'm not selling. I wouldn't sell my core. I sell the stuff around the core, and I just rotate, right? Based on the market, based on, if I have, new money or, my feelings, whatever. But that's how I would approach it, Ramon. Is you have your core that's your base that you stick with, and then place bets, maybe no more than 2 to 3% of your portfolio, and use that to buy stocks. Use that to buy a crazy ETF. I don't know. That's how I approach it. That's my take. All right. This question about the QQQM is interesting. So, the question here is, what is the best way to track the NASDAQ 100? I don't know how to answer like that question. I don't know what the best means, right? The QQQs was the second ETF ever made. Okay, the QQQs, and it's the second oldest ETF. It's one of the largest ETFs. It tracks the S&P. I'm sorry, it tracks the NASDAQ 100. The QQQM is actually, I'll be honest with you, I don't really own it. Let's do this. Let's go to the site because I don't even really know what the difference is. Let's hop over to Invesco. I don't. If you know the difference between the two, let me know, because I'll be honest with you, I really don't. All right. The expense ratio is smaller. Okay, that's something, I guess. It's going to be the same. It's the same index, so it'll be the same, right? Oh, okay. So they cap it. So they mess with the weightings, is what Dan's saying. So QQQM has certain rules in place that will mess with that will prevent a certain stock from becoming, a certain weighting maybe in the fund. So that makes sense. So yeah, weightings can always impact performance, right? Equal weighting versus cap weighting. I don't know if I have the answer to this question, right? Obviously, one of them has a lower fee than the other, so that's cool. I wouldn't pay too much attention to liquidity. I mean, the QQQ is like the most liquid thing ever besides like SPY. I don't know how liquid QQQM is. I'm sure it's liquid enough. I mean, there's volume there. I really don't know if I have a good answer for you on this one, SNR. I mean, they track the same index. How much is the performance really going to differ? Let's do that. Right? Is the performance really going to differ that much between? No. Yeah, I've got it up on the screen there, but you can't see that. Performances look the same. So what are we really talking about here? Performance is identical. Okay, Brian Blockchain, great to see ETFs for crypto. Totally agree. Thoughts on ARKF or ARKK right now? Look, man, I own the KW. Okay, I'm in this with you guys. I'm in the ARK game with you guys. Does it suck? Yes, it sucks. However, whenever I think about this all the last few months, I always remember to zoom out and I look at this. Now, if you didn't participate in this, if you bought here, well then yeah, that sucks for you. Understand why you're buying something. Have an exit plan before you go in. Okay, like I said this morning, I'm pretty sure I have like a stop sitting out somewhere at like 120. But I don't really intend to sell this. I have a pretty high tolerance. Again, this is like 3.5-4% of my portfolio. I'll ride or die with this. I'll take the risk of underperformance for the risk of an of a year like last year. No, it might not happen again. but that won't kill me. You know what I mean? So the question was ARKF and ARKK. It doesn't matter. Honestly, it doesn't matter. They're all out of favor. There is no point in trying to pick a winner between KF. Oh, 332. Crap. Okay, I got carried away. The At the Close show is going right now without me. I'm sorry. Here, let me do this real quick in chat. Anything else that I missed? When do you rebalance my ETFs? That's a good question, Adam. When do I rebalance my ETFs? I do like some maintenance like once a year. I'll look. So for example, like VEU is underperformed. I probably should buy more VEU. When I bought it, it was 20% of my portfolio. Now it's down to like 15%. So, but like once a year, nothing crazy. This doesn't have to be like, surgery. You're doing it all the time. I try to keep things simple, right? There are some more questions here. Okay, I didn't get to the cover call question. I didn't get to there's one more thing. Explain DBA. Okay, I'm going to write this all down. DBA and covered calls. I'm sorry. I kind of got in my own little world there, and I got distracted. Can you create a Spencer demo ETF and track on the show? That's not a bad idea, actually. I got to look into that. How did I create my own dummy ETF? Could probably just make a paper account, right? Okay. That's I'm sorry if I missed your question in chat. I really do. Smash the like, guys, if you like this sort of thing. Just me, just kind of shooting this shit, talking about ETFs and stuff. But I gotta go. At the Close shows right now, and I will see you on this video. Should redirect straight to that, but if it doesn't, just go to youtube.com/Benzinga TV. Thoughts on the new Ethereum ETFs? Gee, they're awesome. I cannot wait till they come to the U.S. I'll have Elliot Johnson, who works for one of the firms that launched an Ethereum ETF, on the show in 2 weeks. Until then, guys, smash the like. I'll see you on the At the Close show.